All right, looks like we're live. Hello, everyone. I hope you all doing well. We're waiting for Clive. He should be coming on, hopefully at quarter 2. He might be a little later. Let me know if you can hear me well. Yeah, Rudy. Rudy is in the other room. He's with his mom. He's doing really well. Yeah, he was happy to see us come back yesterday. We came back yesterday in the afternoon from Yorkshire. Yeah, we have been to the Lake District, David. It was about, well, over 10 years ago, and it was beautiful weather there. We went in April. It was probably warmer than it was now in Yorkshire in July at that time. Nice to see all of you here. Sonny Olofsson from Sweden. Nicholas Ciani from Argentina. Moonraker, North Carolina. Ant H. Andrew Arama from Quebec. Boris Perez from South Florida. The sound and picture is great. Good to know. Thank you, MW 3516405. Chris Snow says he hears well. Yeah, Rudy's doing really well. As I said, he was happy to see us come back. Blocks, any advice buying silver from cash converters? I mean, I'm not sure if cash converters sell silver. They might. I don't think it's a problem. Make sure, yeah, because they sell per gram. So 31.105 grams is an ounce of silver. So make sure that the price is reasonable. So it should be fine buying from them, from cash converters. Quadman 72 says hi from Berlin. Drickett 1 from Denver. Gold Stacker from Denmark. Mickey from sweltering Southwest Florida. Geopolitics says good evening. Did I watch the golf a little bit? Yeah. Not the probably didn't watch too much at the end because it was like a runaway by Brian Harman. He is quite a relatively unknown for those people who don't play golf, but he played very well. Martin Ellis from Toronto, Mark Veriken from Belgium. Did you see the new QE2 status statue at your cathedral? I did. Yeah, we went into the cathedral. Oh, here's Clive is just arrived. We did go into the cathedral. It's quite expensive. It's 16 pounds per adult to go into the cathedral. And yeah, so they charge quite a bit. Hi, Clive.
Good evening.
How are you?
Good evening, Mario. Just a second. I've got you on twice.
All right.
Right, now I can hear you. Right. I'm hearing a bit of an echo there, but it's gone now.
Good.
Did you have a lovely holiday in Yorkshire, Mario?
Yeah, I did. Someone just asked if I saw there's a new statue of Queen Elizabeth II they've put outside the cathedral. I did see it. I was just saying that it's quite expensive to go in. They charge you 16 pounds per adult. And I think children have to pay like 10 pounds as well. So it's not the cheapest visit, York Minster, but it's very interesting. It's a big cathedral. I think it was built in the 1300s, so it's quite old.
It's a lot of money to go to cathedral.
Yeah, yeah. I was surprised. Usually when you go to a church, they don't charge you. But one interesting thing about the Church of England, that I remember when I worked in the city, I had a Bloomberg terminal, so you could check who were the biggest shareholders in the big companies. and I'd go through them, and the Church of England was always at the top. I don't know if you noticed that.
No, I didn't know that. Well, it doesn't surprise me. Of course, it's been a charity for 1,000 years, I suppose. And when people die, they would leave their wealth, their land, to the Church of England. And then periodically, the kings of England would seize it to pay off their war debts.
Yeah. Someone said here, if you think it's hot in Yorkshire, you should be in Texas. No, it wasn't that hot in Yorkshire. It was about 15, maybe 20 degrees was the highest centigrade. But here in England, we've had a very mild July. No climate change here. What about in Geneva, Clive?
We were bumping along 28 today, going to be 30 tomorrow. And I think we're going to go a bit higher in the coming week. And I was in Portugal last week. It's on the Atlantic Ocean, so it's a little bit cooler. It's about 28. So it wasn't the kind of terror heat that people are suffering in some places, but it's certainly getting hotter in this world. Yeah,
but I remember, in 2003, I was in Geneva and in Switzerland. It was really hot. I don't know if you remember that summer. So anyway, the title of the live stream tonight is U.S. government set to double in a decade. And of course, you wrote about this, and that's why I wanted to, have you on so we could talk about this and to warn people about what's going on, because as we know, there's a lot of distractions out there. Do you want me to share it, or do you want to share it? I can share it.
Maybe you start. I've got a few slides to show when you're ready, but maybe you start by sharing the article that you wanted to show. Yeah,
there we go. So I'm going to allow you to share as well. Just change. So there you go. If you want to go over it, I've read it a few times.
Sure. So the Congressional Budget Office regularly publishes updates on the outlook for the US budget. And they've projected forward not only for 10 years, but sometimes as much as 40 or 50 years into the future. And Mary, I'm just going to share a page now to show people where they can get that. If you bear with me for a second. I think it's, there we are. Yeah. Do you see it? Yeah. So that's the Congressional Budget Office, and you can see where my mouse is. You've got the 10-year projection down here for various states. There's May 2023 is the last one. They've also got the long-term projection, which goes out sometimes 50 years. The latest one being in June 2023. And if you click through on the 10-year projection, you'll get a sheet which looks a bit like that, which tells you where the revenues are coming from and where what the debt will be. So if you look where my mouse is on the far right-hand side of the yellow square, you'll see that by 2033 they're forecasting incoming taxes of 7 trillion, and they're forecasting expenditure for that year of 9 trillion, and they're forecasting that the debt, which is down at the bottom right-hand corner, will be 47 trillion. That's debt owned by the public, by the way, not by the Federal Reserve. That's a huge increase from the 24 trillion that you see on the left-hand side at the bottom, where my mouse is. The 24 trillion at the moment is, they're projecting that the public at large, that's you, I, your pension fund, the government of China, and anybody who's not a government agency, will be increasing the government debt from 24 trillion through to 47 trillion, literally doubling it. And my first question is, where's that money going to come from? I don't think my pension fund's got enough to double its holdings of treasuries. I doubt yours has. And I don't think the government of China's got the appetite to do it. So that's my first question. Where's the money going to come from? But before we get into that, Mario, I'd just like to look at how they got it wrong in 2012. So what we're looking at here on this page is in the right-hand column, highlighted in yellow, year by year, the 2012 calculation or forecast or budget of where they saw debt to GDP. So for 2022, in 2012, they were projecting debt to GDP should be 61%. That's debt owned by the public. We're now at 97% debt to GDP owned by the public, and over 130 in total. So they got it massively wrong. The debt that they've issued is much, much higher than they originally forecast. But if you walk forward to the future, this is going back to the 2012 forecast of the Congressional Budget Office. They were forecasting that this debt to GDP ratio would drop lower and lower, lower, lower. And by 2069, they were forecasting at that time that they would have no debt at all. That's the United States would have no debt at all in 2069. Now, that figure's obviously gone out of the window. And if I look at if I go to this page, you can see the forecast as they made it. I've only got up to 2020, from 2011 to 2020. So this is the forecast they made in 2012 as to how much debt there would be owned by the public going forward from 2012 to 2022. So you can see in 2011, they had 10 trillion of debt owned by the public, and they were forecasting it would reach 15 trillion. What actually happened is what you see in red.
Yeah.
It actually got to 25 trillion. Yeah. So the forecast by the Congressional Budget Office in 2012 was massively wrong. The government has borrowed 10 trillion more, about 70% more than they forecast from the public. In other words, why has that happened? Because the Congressional Budget Office is very tied. It's got its hands tied behind its back. It's got to put a budget out according to what the government says they will spend, but the government always spends more than expected. And the reason for that is there's recessions, there's natural disasters, there's wars, there's pandemics, there's banking crises. There's all kinds of things happen which cause the government to spend more than expected. So the past projection was completely wrong. And let's look at the current projection. Now, this is the projection they made in May, late May, where they saw our debt to the debt owed by the public at 24 trillion, and they see it going to 47 trillion, literally a doubling of the debt. And so my first question is, even if they're right and there's no overshoot, where's all that money coming from? Well, I took a look at M2. M2 is notes and coins in circulation, it's bank deposits, it's certificates of deposit, it's kind of any kind of money that exists in the banks which you can get out at short notice. Right now, that's 21.6 trillion. So if they were to go from 24 trillion to 47 trillion, well, that would absorb 23 trillion against a money supply at the moment, M2, of 21 trillion. So my question is, where's all that money going to come from to invest in these treasuries? It's going to be a little bit hard to sum it up. Of course, they can always print it, and that's what people will be writing in the comments. But let's have a look if they get it wrong by, I'll just show you the money supply. There's the money supply from the Louis Fed. You can see the money supply is 20.6 trillion at the moment, actually. Just gone down a bit. And what did they get this budget wrong? Here's the same budget, same blue line going from 24 trillion to 47 trillion of debt as forecast by the Congressional Budget Office. But my calculations, I've done my calculation on the back of the envelope, which will be different to the same degree as they got it wrong in 2012, show that it goes to 75 trillion. Yeah. And that assumes that the interest rate stays very low.
I mean, that's and you also talked about the unfunded liabilities that they owe. Is that included there on the 75 trillion?
No, I haven't included it, but that's a very important point. In the Congressional Budget Office's budget for the future years, and they say this in their notes, they are legally obliged to assume that payments from the government employees' retirement and disability fund will continue to be made to those employees and they're legally entitled to those payments. That is basically people getting their pensions. But it's well known and documented by the Congressional Budget Office and others that these funds will be bankrupt before we get to 2033. They won't have the money. Therefore, that liability it's a legal liability, it will fall on the government. But the Congressional Budget Office is not allowed to put that liability into the forecast. They've got to assume that money will still be printed out of or come out of thin air to fund the old age pensioners. So it's going to be worse than I've showed here, in my opinion.
Yeah, so you say here that to entice the public to buy more treasuries, interest rates will need to be higher, but as interest rates go higher, it's going to consume more of the incoming taxes. At 9%, the interest expense on 75 trillion, will consume the entirety of the projected 2033 tax receipts of 4.9 trillion. And you say, I don't think we will get there. Something will break first, and I agree. And one possibility you say is that the Fed will step in to buy those treasuries. That will relieve the burden on the public. It will also keep interest rates from spiraling out of control, but it would be inflationary. If you think the latter is the most likely scenario, then buy gold, run, and don't look back. And I would add silver to it too.
Absolutely. And that's, first of all, perhaps I should explain why the Federal Reserve buying the treasuries is inflationary and the public buying the treasuries is not inflationary. When the public buy treasuries, money is being withdrawn from the system and it's effectively invested in treasuries. So you can't actually spend it while it's invested in treasuries. Whereas if the Federal Reserve buys the treasuries, they print the money, the government spends it, and the money's in the system, increasing the money supply, and you can spend it. So if the Federal Reserve steps in instead of the public and buys all this debt, which I think I really think there's no choice, because I don't think the public can buy it, they don't have the money. If the Federal Reserve steps in and buys it, it will be very inflationary, and that will be good for all tangible assets. And by that, of course, it's gold, silver, property, equities, or anything else that you could think of which has got a fixed supply and which is desired by humans.
Yeah, and it's interesting because I don't know if you've seen the news that Henry Kissinger just went to China a few days ago. And I actually saw a picture of him meeting Xi Jinping, and behind him was Hank Paulson, the former Secretary of the Treasury, who was he was Secretary of the Treasury during the 2008 collapse. And I think one of the reasons they bailed out the system was because the Chinese had a lot of mortgage-backed securities. So there's speculation why he was there, whether it was because there's a lot of geopolitical military tension, or someone's spoken about a bond crash and they're trying to get the Chinese to stay involved in treasuries. But we've seen, I've seen charts that not just mainland China, but Hong Kong holdings of treasuries are going down. So what's your speculation on this visit by Kissinger? And I haven't seen anyone mention Henry Paulson because he was there. He's right behind him in the picture.
I think every central bank and every government around the world knows that they're on a hiding to nothing if they use treasuries as an investment. Of course, they will have to have some, just as you need money in your wallet for petty cash for your trade. But I don't think they're going to go through a policy of actively increasing the treasury holdings at the moment, probably more likely to go down than up. So that's obviously another source of treasuries which has got to go somewhere, because they'll be selling them into the market, and down the line that would mean higher interest rates. But maybe I'll just say a couple of words before someone calls me out for being wrong on interest rates. We've seen in the commodity futures exchanges over the last 12 months a massive collapse in commodity prices of all kinds, and I'm talking about basically the food commodities, and that's now working its way through to the consumer price indices, so that inflation is going down a lot, and that might give the central banks room for maybe just one or two more hikes and then a pause, and people will start talking about low interest rates. We might see interest rates coming down a bit, but the need by the government to borrow money to fund its liabilities is not going to go away. And sooner or later, they're going to have to, and they're already doing it now a little bit, but sooner or later, they're going to have to go back into the market to sell those treasuries to raise the cash. And that will push up interest rates. So I think we're going to possibly see a flat at the long end, more of a flattish yield. At the short end, I think the interest rates are going to come down after they pause, and then I think they might reduce them once, and then they'll be back up again. That is my opinion. So I wouldn't be rushing to invest in bonds. As to what effect that has on commodities, gold, equities, and so forth, historically, they say, and this is the economist book saying, and it's not really true, but people say it, when interest rates go up, it's actually bad for assets like gold or equities. But actually, that's not really proven in my books. Certainly, if inflation is higher or rising, people will still want to own these hard assets.
Yeah, and I follow. I've interviewed him several times on the channel. Let me get rid of this. But Tavi Costa, you probably heard of him, and he's talking here about the CPI and how it's the first time in 102 years that it's dropped 12 consecutive months on a year-on-year basis. But he also talks about the fact that inflation, or what they call CPI, they usually go in three waves, and he thinks we're here, like if you compare it to the 60s, 70s, and early 80s. Is that the way you see it?
Yeah, I think I don't think it's the right thing to look at the CPI. I mean, obviously, we've seen the food prices go all over the place. They were they were rising very fast, and now they're falling off a bit. What I tend to look at more is what my share of money is compared with all the money on the planet. And the amount of money on the planet is literally going up. If we take into account the treasuries, which is future money and the bonds and everything, it's going up very fast. And it's only a question of time. Well, it takes no time at all for the increase in the wealth and money supply to beat the interest you're earning. So if you want to go backwards in wealth terms, put your money on deposit, earn 5%, but you'll be going backwards because the whole world will be earning more than you in their tangible assets.
Yeah, that's right. You showed that forecast there about the budget office, like in 2070, they expected debt to be at zero back in 2012. It's interesting because I was reading something in the FT some days ago, or last week, and it says UK government debt to reach 310% of GDP by 2070s. A fiscal watchdog warns. My first reaction is, okay, will we even get there under the current setup? 2070. I don't think so. What's your view on this? And maybe after this, we can look at that video I sent you about Britain. Poverty in Britain, which I thought was interesting.
Will we get there? We've never been there before, Mario. Most countries which got into too much debt long before they got to the levels that we are at now, there was a failure of the system and there's a revolution, or they started a new currency. Do I think we'll get to 310% of debt? No, I don't think that's possible. I think something will break before we get there. I think something will break in the next 10 years.
Yeah, no, I agree. And what I wanted to talk about as well, as I said earlier, is let me bring because I had to get a VPN. This is quite interesting because someone in the States sent me this link to a YouTube channel from DW, which is the German, I think, state-owned. Is it like the BBC, I think?
Yeah, it's the BBC equivalent. They broadcast around the world in local languages.
Yeah, so someone sent me this, Poverty in Britain, Why Are Millions of Brits So Broke? And so I tried to watch this, and the interesting thing is that in the UK, if you don't have a VPN, as you see there, I never had a VPN. I got a VPN browser and I was able to watch it, but I tried to watch it on YouTube, and it looks like YouTube UK has basically doesn't allow you to watch this video. And I thought that was interesting, but I watched the video, and to be honest, some of it I would say is biased towards socialism and left wing, but it's also a sad video, the state of affairs of what's happening in Britain. Maybe we could start. I'm going to give some
Well, maybe I'll
yeah,
make a small comment on the video and
yeah,
maybe a reason why it's blocked. This video is highly critical of the UK government, extremely critical,
yeah.
and it's being produced by a German company. So I'm not saying it's been censored, but clearly I'm aware that if you are in the UK, you can't watch it. They won't let you watch it, but you can watch it everywhere else in the world.
Yeah, so I was able to watch it because I had a VPN, but they are heavily biased against the government, and I agree. And they didn't, the problem I have with it is that it's not a particular government. We're not in this situation because of a particular government, but more because of I think, the political system of left and right. Because if Labor was so good, we wouldn't even have the conservatives in power. Everything would be great. So, but despite that, can we, I'm going to go through some of the numbers and also let you say what you want to say about it. But according to them, 1 in 4 or 15 million people in Britain live below the poverty line. And they're trying to show the inequality, and I think there is a lot of wealth inequality. Apparently, there's 171 billionaires. So I'll let you take over now, Clive, and if you want to.
Well, it's a pretty sad story. They've got stories of people dying of starvation in the UK, and people unable to get help from the government, and basically some jobs worths not handing out social security benefits to people who are entitled to them. That's basically the gist of the video. And it is very, very sad that there are an awful lot of people who are living on the breadline. And I know that if you go through any large city these days, not so much London, but certainly the northern cities, and you perhaps saw this, I don't know how it was where you were, but if you go through the big cities like Manchester or Birmingham or Liverpool, you'll see an awful lot more people sleeping on the streets than I've ever seen before. The numbers are undoubtedly going up, and rents aren't getting any cheaper. But it's not just those who are on the breadline and living rough who are in trouble. There's an awful lot of people with mortgages are going to suffer greatly because the cost of servicing their mortgages doubled or tripled. And whilst I had some pretty hefty mortgage increases when I was very young, I went from 12 to 15%. That's nothing because it's only about 30% increase. People are seeing their mortgage rates going from 2 to 6% now, and I think it's even higher than that. So it is very, very tough for people in the UK who have got mortgages if they were living quite close to the what they could afford. And I think there's the situation in the UK is looking quite dire for a lot of people.
Yeah, and I think it's not just the UK. Even in Germany, I saw some months ago, there's a German guy, he's called German in Venice. He lives in Venice Beach, California, and he went back to his hometown in Germany this year, and the place didn't look nice at all. Homeless people there too. So it's not just the UK. But one interesting thing that this video mentioned is that full-time female workers, they're now full-time workers, female, they're going part-time because if they have children, they can't afford to send them to childcare, so they only work part-time. They have an example of a woman there who used to work as a civil servant and have a pretty good job. So I think that's probably one of the reasons why as well they can't get staff. A lot of the bigger companies or governments. And so I thought that was interesting. And the other one was that there's 16 million people in the UK facing heat or eat dilemma. So are they going to buy, cut down on food or so they can heat their house? Yeah, so it's pretty bad. But I would say, this video was very critical of the conservative government, but as I said, if labor had done so well from 1997 to 2010, we wouldn't be in this boat either. Do you remember, Clive? I think when the coalition government took over, the Alistair Darling, I think he was the former chancellor, he or someone in the treasury left a note, said, good luck, there's no money left, we're broke.
I didn't know about that.
Yeah. So,
But
you know, I read the comments from this video, and a lot of people are just blaming the conservatives, and I'm apolitical, blaming Brexit and so on. I think it's a much bigger problem. We have to go back to probably 1971 and the fact that we've been under a heavy inflationary financialized world. What's your view on that?
well, in 1971, we had rising inflation, but also the government had run out of money. And I don't know if it was that year, but it's somewhere around there. Maybe it was 1965 or, but somewhere in that region, they had to raise taxes and raise taxes. And finally, they put them up to, well, I can't remember who it was. Was it Wilson or Barber or one of them said, we're going to tax the rich until the pips squeak. Yeah. And they raised the basic rate of tax, or no, the highest rate of tax to 97%. Wow. And on top of that, they added a 15% investment income surcharge. So if you were wealthy with investment income, your tax rate exceeded 100%.
Yeah, and that's why people like all the celebrities and people like Jackie Stewart moved to Switzerland back in the 70s.
Yeah, and Monaco. Monaco did very well out of it.
Yeah.
Of course, these days they go to Dubai.
Yeah, well, Dubai back then was like just desert, wasn't it, really?
Yeah, I mean, that didn't exist back then.
Yeah. Well, you know, today, was it today? Yeah, today I went to fill up the tank of my car because almost it was down to almost zero from driving back. And I actually had to look at the receipt. And so it was basically almost a full tank. And I paid £75.64. But I worked out that the VAT and the fuel duty worked out to £36.18. So I paid almost 50% to the government. And, you know, when you're filling up the tank. And it just seems to me that if we get a new government, a new party in power, will things change? I don't think so. And you have to wonder, Clive, where do you think all this money is going? Because we're in so much debt. We're running big deficits. And it's not just in the UK, but also in other Western countries. And yet we have, you know, people, and I'm not a socialist, but if they're going to use all these hundreds of billions, maybe they could help Blackpool or, you know, Liverpool or Manchester a bit, but it just doesn't seem to. To me, I think it's all going to these 171 billionaires. And will it improve with labor? What's your view on all this? It feels to me like we need a complete audit of all the money that's been spent in this country for the last 20 years and see where it's gone and who's wasted it.
And so as a general rule, these billionaires are billionaires because they own stock in the company they founded. And probably they've got a few million in the bank, but it's not the billions that they are said to be worth, because the billions actually are represented by paper stock of their own company. For the most part, that's not universal. But in terms of where the money's going, the world is actually chock-a-block full of people who are willing to take your pounds or your dollars all over the world if they can get it. And we're seeing, and we have seen over the last decades, I won't say the elimination of poverty. There's still an awful lot of poverty out there, but certainly many of the emerging countries have been emerging quite fast, and they've been able to do that thanks to the money which is sloshing around the system, and it's arriving over there and they're accumulating it. Of course, if they start to see that the money is untrustworthy, they won't accumulate our dollars or our pounds or our euros anymore. They'll try and look for something more sound.
Yeah.
Now, talking of sound money, Mario, you were the other day, you were in York broadcasting, and you mentioned newspapers and things, but I had a bit of luck. I was in the coffee shop with my little boy, he's 6, and I discovered I'd forgotten my wallet. So I was groping around in my pocket to see how I could pay the bill, and I found a banknote. Then he must have looked at me like I'd gone completely mad, because he obviously thought, what on earth is this daddy paying with a bit of paper? But anyway, the good luck in my change, I got a 50-cent piece from 1966. Now in Switzerland, we still have silver coins. We still have silver coins circulating.
Wow,
and
really?
They're indistinguishable from the modern silver copper nickel coins. In fact, the silver coins, even the ones from 100 years ago, look identical. The only difference is the date, and the ones which are silver will have a patina on them. A patina, for those who don't know, is like they call it tarnish in England, but they'll have a certain patina, maybe if they're old, like this one has. I got this silver 50-cent piece. It's probably worth probably 3 or 4 quid, but obviously worth a lot more than I paid for my coffee, I'd say, or probably worth as much as I paid for my coffee.
So they gave you that as change?
Yeah, it was. I didn't know at the time, but when I go, I always check my change, because you never know when one of the old Swiss silver coins will turn up, and I pull them out because they're all worth, if you melt them down, a lot more than the face value.
Yeah, I mean, I can tell the difference between the copper, nickel, and silver coins right away, but some people can't. In Switzerland, I think it's all the coins before 1968. So there you go.
There was another funny thing happened in this coffee shop. I was reading the newspaper, and my little boy, I don't usually read the newspaper, but I'd forgotten my phone, so that's why I couldn't pay the bill. My little boy looked at me. He said, "You know what, Daddy? A newspaper's like a boring iPad, but it's made of paper." This is how the younger generation are thinking.
Yeah. I know. So, there's something I wanted to show you here. I don't know if you've seen this, which seems a little bit worrying for Europe, especially the Eurozone. I guess Switzerland as well. I mean, the Swiss banks are probably in even worse shape. ECB to ask banks to provide weekly liquidity data to monitor their health, supervisory chief says. And I like the way he says, "Oh no, they're doing great, but we just want to see them every week instead of every month." So what's your view on this, Clive?
Well, the real problem with banks in general in Europe, USA, UK, is that banks generally lend out for long periods of time. So if you borrow for a mortgage, or if you are a company and you need to borrow to build a new factory, it's a long-term loan. At the same time, in recent years, banks have been, certainly for the last 10 or 12, 15 years, banks have been borrowing from their customers literally at short term, overnight. Because as we went through this phase of zero interest rates, everybody stopped putting their money on long-term deposit. Now, if I go back to the 1970s, 1980s, when we had building societies, you could lock your money away for 1 year, 2 years, 5 years, or whatever, and earn a premium rate of interest. And that meant the bank could match its liabilities in terms of maturity with its assets. Assets being the mortgages they lent to the customers, or the loans they gave the customers, and the liabilities being what they owed me, but they didn't have to repay me for 5 years. The problem we've got now is all the banks have got a lot of short-term liabilities, that's customer deposits, and a lot of long-term assets, which is the loans they made to the customers. And in many cases, those loans are at fixed interest rates. They can't be changed for a year or 2 years or 5 years or 10 years. And the problem with that is the customers are now starting to say, I can take my money out of the bank, I can put it in a money market fund, which invests in treasuries or government bills or whatever, and earn 5%. But if I leave it at the bank, I'm going to earn 1 or 2%. I'll take it out. So those short-term liabilities are coming out of the bank, but the banks can't call in the long-term loans because they're long-term. And therefore, the risk is that the bank's liquidity could go down quickly. And that's why they're having to monitor it to see if a crisis is brewing.
I see. Yeah. So yeah, that's interesting. And euro rates are not as high either. They've got a bit more room on the upside than Bank of England or Fed rates, right?
Yeah, I think the direction of travel, even if we have a pause, will be upwards. We might see a pause, a dip, but I think we'll hit new highs in interest rates in Europe, in the USA and the UK, probably 2 or 3 years from now.
Yeah, yeah. So one of the things that they mentioned in that video about is called Poverty in Britain, Why Millions of Brits Are So Broke. So if you want to watch that, if you're in the UK, you have to have a VPN because it's not on YouTube. UK has blocked it. But one thing they said is that 4 million households, and there's a total of 28.2 million households in the UK, they have to use a prepayment meter for their electricity. And apparently when you use that, you pay 10% more, which is doesn't seem fair. And maybe you could explain what a prepayment meter is, if you know, Clive, and if not,
well, that's exactly the way it works in the UK. They can't cut your electricity supply off as such, but they can make you pay it in advance. So if you start to miss your bills, they'll be run like a shot, and they'll install a prepaid meter. And basically, when you want electricity, you've got to then go down to the tobacconist, the local newsagent, or a shop. You buy a card, and then you can use the card. I'm not sure whether you have it's a scratch-off card or what, but I expect it's a scratch-off, and you can then get your electricity. But it probably costs for 2 or 3 days electricity. It probably 4 days maybe. It costs you at least 10 quid for 3 or 4 days electricity.
Yeah, you top it up. I think it's like a little. It's like USB thing. They put it on the machine, and they can put 5 or 10 pounds. And like you said, it doesn't last that long, and you're paying 10% more. There's a question here. It says, and I assume this is in the US. Mario, why do banks usually push you towards money market accounts?
I doubt the banks are pushing the customers into money market accounts at the moment, unless it's their in-house money market fund, which will be paying a lot less than the 5% you can get if you go with an independent one.
Yeah,
they might do that if they think you're going to take the money away from the bank. They may try and say, "Well, put it in our money market fund, and you'll get the interest rate you're looking for." And then, of course, the money market fund can lend the money back to the same bank.
Yeah. Here in the UK, they finally had to go at the banks for their savings rates, and my bank, NatWest, they raised it from 1.1 to 1.4. So, and the base rate is at 5. Why do I keep some balance in the savings account? Well, because I have some tax liabilities, so I have to keep it there. And if I wanted to put it in for a year, that would be too long, because I'd have to pay the tax by the end of January next year. So, but I think 1.4 is not that much. I actually took some of that savings that I put into gold, and the gold has come off a little bit in pounds, but I saw that in the last few days of the past week, it's actually rebounded quite strongly, because the pound came off quite a bit, and we're back to around 15.30. And I think the technical picture looks good. So that's the way I look at it. But there are rates that you can, if you tie your money for a year or two, you can get more than 4% right now in the UK. But the other thing I was reading, Clive, is that in the last 13, 14 years, with very low rates, very few people saved. And there was an inducement for savers that you only start paying tax on the interest that you earn on above £1,000. But so you had to have $1 million, with a rate at 0.1 to start paying tax on the interest. But now with rates going up, it looks like the taxman is going to be raking in a lot more interest from savers. And I read this article, and I commented in the Telegraph, well, if you buy sovereigns, yes, they don't pay interest, but and I'm going to share this, and I think a lot of you have seen this. If you buy sovereigns, for example, this is from in Gold We Trust from Incrementum. If you look in pounds, since the year 2000, we've had 10.6% average annual return in gold. So you're making the capital gains. There's no tax. Yes, there is no income, but the problem in the UK, Clive, I think, is that gold is not considered a financial asset. So financial advisors will never talk about this to the average person.
That's a funny thing. I mean, I spent most of my career doing wealth management in Switzerland, and gold was always part of asset management. Of course, the rates, the amount exposure of gold could go from 1% to 10%, depending on the environment. And I think in the very old days when gold was way down there in the 200s, we were perhaps sometimes above 10% exposure. But yeah, gold has always been an asset class that the Swiss would put in a portfolio. But unlike the UK, when a person buys gold in Switzerland, generally the bank will be holding the bars in safe custody on behalf of the customer and will be charging a safe custody fee, perhaps 0.1%, perhaps 0.2 or something like that per year. So the bank is still making money if the client buys gold.
I see. Yeah. Someone is asking about Petrobras or PBR. I don't know if you've heard of, if you follow that ADR.
Well, I don't own any, but I have owned it in the past.
Yeah, apparently they've changed. They made an announcement about the dividend. I haven't seen it. It's got quite a large dividend. That's Matt Bittner asking, what's happened, Matt? Maybe you can tell me.
Well, I suppose Petrobras is a Brazilian company which also has shares in the USA. But I think a very important point to make is Brazilian shares in general are very, very cheap and have a high yield. So you don't have to home in on any one particular like that one.
Yeah.
You could buy the whole market through a Brazilian ETF, and you're probably getting north of 10% yield anyway, if you think that Brazil's a good place to invest. And I'm not going to comment on that. I don't own anything in Brazil at the moment.
Yeah, Tavi Costa, he's originally from Brazil, and I don't think he's saying this because he's biased or anything, but he did a chart, like a long-term chart, Brazilian stocks versus I don't know, S&P, and it's almost breaking a trend line. He thinks, like you, it's very cheap. I mean, it could be speculative. We're not giving advice, but it's probably the risk reward is pretty good. And I've noticed the Brazilian currency has been relatively strong the last 2.5 years, actually, versus the dollar.
I think there's quite a few emerging markets which are very cheap at the moment. I mean, notable ones are Turkey and Hong Kong, and I know there's others which I can't think of which ones they are at the moment. Yeah. So anyone who wants to benefit from that should just buy a generalized emerging market fund.
Intrepid Soul, thank you for your super chat. He says, please ask Clive if he wouldn't mind sharing the story of the 6-year-old son. Thank him for doing his part to prevent
I see. So what he wants to do,
population collapse.
Yeah, what he wants to do is what I was doing at the time of conception. I think I'll have to ask my wife about that.
Anyway, it's getting personal, isn't it? So Mario, why is the Swiss currency the least affected on the gold chart? I'm guessing they inflate the least. I'll answer and then I'll let Clive answer. I've looked at a website called fxtop.com, and it goes back to 1953, and you can quote it. You can quote in terms of grams of gold. So you put instead of putting XAU USD, you put USD XAU. So you're going to get how many how many grams you could get for $1. And since 1953, because that's how far back it goes, I think the dollar's lost 98% of its value versus gold. And if you do it for the Swiss franc, it's lost 91, which is quite a big difference over well, 70 years. The pound, for example, has lost 99. I personally think is because the Swiss, they were under quasi gold backing up until 2000, I think. 40% of all Swiss francs had to be backed by gold. Is that why, Clive? Is that why you think the Swiss franc performs better?
I think there's two things. First of all, you're right in what you say, but I add two things to it. The first one is the Swiss tend to have a balanced budget, which is something we're not finding in most of Europe, UK, or USA. And the second one is the Swiss debt to GDP ratio is way below the Maastricht. Is obviously we're not in EU, but is way below the Maastricht Treaty absolute limit, which was supposed to be 60. It's about, I think the Swiss one is about 40%, so 48% debt to GDP ratio. The rest of the European countries are all massively above the 60% limit, which was defined in the Maastricht Treaty. So the whole of Europe is way beyond what is deemed to be unsustainable. And Switzerland, which is not part of the EU, is actually way below.
Yeah.
So it's a really, really sound economy at the moment.
Yeah, let's see, there is the US debt clock. You can go into the world debt clocks, and I'll share it here and we can have a look at where Switzerland is. I know that Russia is like below 20% of GDP, their national debt, which is really low. There's Switzerland, public debt to GDP, 48%. So
it's pretty low compared with in the G10.
Yeah, look at Russia, 19.5%.
Obviously a lot of emerging markets and dodgy countries have very low debt to GDP ratios because it's a struggle for them to borrow. Nobody trusts them.
Yeah. But it's not a bad thing, I'd say. But I remember Germany prior to the 2020, their debt to GDP was just below 60, and they were actually running surpluses. So it's kind of sad that it's all gone out the window and they're up to 80 now.
And I think Germany is one of the most sound countries in Europe.
Yeah. Oh, look at Japan. Well, Japan, they're at 300, and they're, we're talking about the UK being at 310 by 2070. Japan's at 300 right now, public debt to GDP. So I'm gonna stop sharing this now. Yeah, so that's why the Swiss franc is, and also the Singapore dollar is also quite a relatively strong fiat currency, isn't it, Clive?
It is. It's regarded as akin to the Swiss franc in terms of its strength, and it's obviously a very civilized, lawful society as well. So yeah, I don't invest in the Singapore dollar, but I think it's a popular currency for those who want, especially in Asia, who want something sound.
Yeah. Clive, someone is asking me, maybe I don't know. Is there a workaround way to buy Russian equities?
Yeah. Up until very recently, in the UK, for example, there were funds which, this is before the invasion, there were funds which had the name Russia in them. For example, one of them was JP Morgan Russian Securities PLC. The trouble was, after the invasion, many banks and brokers in their wisdom put it in their wisdom to put these kinds of things on their restricted list, and whether you wanted to buy or sell it, you couldn't do it. And that was disappointing because the price of these things literally collapsed an awful lot. I mean, for example, many of the companies took the view that Russian securities were now worthless. So they wrote down the NAV of their Russian security to zero. So you could buy a fund based on the NAV of the non-Russian securities, but get all the Russian securities in there for nothing, except you couldn't because the banks had put it on their block list and you couldn't buy it. I can't tell you which banks did and didn't, but I can tell you a large number of banks made it a block security. So you couldn't trade it. Now, a lot of time has now passed on, and these banks, these firms, including JP Morgan, Russia Securities, they've all changed their name to remove the word Russia. They now give them names like emerging market or Eastern Europe or something. They've changed the names, and they may well have disposed of their Russian securities. But if you go into the investment trust area in the UK and look for some likely names with things like Eastern Europe or emerging market, then you can burrow down, look at the filings, and you can see if they do own any Russian securities. I think that's the way I would do it.
Yeah. Yeah, it's I was trying to buy a company that I've owned before called well, it used to be called Peter Hambro Mining. He used was a company started by Peter Hambro, gold mining in Siberia, and then they changed it to Pavlovsk, and it's a Russian name, but it was a UK company. And I tried to buy some last year when everything kicked off, because it dropped massively, and it wouldn't allow me on the system to buy it. I could liquidate it, but I bet you a lot of the banks and the big investment firms, they were buying it, but they weren't allowing us to buy it. And I wonder if the regulators are actually keeping an eye on it, because I saw as well that Italy, for example, they're still selling a lot of wine to Russia. So I'm not too sure that they're following the rules by exactly as they should.
Yeah, I mean, when we had these sanctions, there were an awful lot of things which got affected, which didn't ought to have been affected. I mean, my question is, why is it you and I should be prevented from buying a UK security which happens to have a Russian asset? Well, that was the decision of many banks.
Yeah. The
and
other thing I
brokers.
saw at Wimbledon is that the Russian tennis players, they could play this year. I don't think they could last year. They blocked them, but they didn't have their nationality on the scoreboard, which is silly, I think. So it's very petty. But anyway, that's something different.
Yeah, and I think also we've got to distinguish between the individuals and the country. I mean, the people who are sports stars and so forth, for the most part, they're not representing the politics of the country. They're representing the sport of the country. It's something completely different.
Yeah. Gary Steer, how much time will pass between when we can convert old fiat to CBDC until no conversion? And does Clive know how much initially will be allowed to be converted in the UK?
Yes, so they've said in one of the papers, they've said that they haven't set the limit, but it's going to initially be 10 to 20,000 pounds of your normal money, your bank deposits, which you'll be able to convert to CBDC at a 1-to-1 rate. Now, that figure may change later. And the reason they say they're limiting it is they don't want everybody taking the money out of the banks and putting it in CBDC, which is government guaranteed, of course, because people would see that as a safer bet. And if they take the money out of the banks, that would be disruptive to the UK banking system. So that's why they're putting the initial limit in. But I think the real point here to note is there will be a limit, which could be imposed and adjusted at any time. So if one day something's going wrong with the UK economy, let's say we have a crisis and people are emptying the shelves in the shops, they will tell you, sorry, but you can't convert your money into CBDCs, or you could only convert £100 a week or whatever the figure is. And why are we doing this? So you don't go down to the shops and hoard goods by buying up everything on the shelves. That might be a reason. Or they might do it because there's a crisis in the bond market and they want to run the economy effectively on the CBDC, and you're not allowed to convert your old currency into the CBDC at all, in which case all your old pounds, all your old dollars or euros or whatever you have, all your bonds are now become defunct.
Yeah. Someone's asking, why would anyone buy CBDCs? I personally wouldn't, but that limit of 20,000, or someone said 10,000 as well, I think recently. Is that, what if you're, let's say, working or you're running a business and you start earning CBDC because you get paid by someone with CBDC, and you've got over 20,000 new CBDCs in your account? I assume that would be okay, right? It's just the old pounds that there is a limit.
Not exactly. So what they're saying in the various papers is, first of all, for businesses, they are still working on the rules as to what the rules will be for businesses, taking into account the business size, the turnover, and other things. But the second thing they're going to probably do, if you receive money into your CBDC, which is more than the limit at the time, that's to be said, it could be 10,000, it could be 20,000 for individuals, and for a business, it might be something else. If you have more money in your wallet than is the maximum allowed, it will be automatically swept. And they don't say where, but I'm assuming they'll sweep it back into your bank account, because you'll have to link your wallet to a bank account, I imagine.
Oh, I see. So, so it's going to be put back into old pounds.
Yeah, which could become worthless.
Boy, I've heard you commenting, I think, on LinkedIn, the unfairness of CBDC. Maybe you could tell the viewers. I thought that's a good way to
So
look at it.
what's a central bank digital currency? This is the new currency which will be issued by most governments around the world. At least they would like to. Having said that, following the events of a couple of weeks ago with Nigel Farage, the need for having cash in the system has become much more apparent to many, many people. So it's going to be a bit more of a struggle to get this up and going all over the world. But what is a CBDC? Basically, it's a government-issued wallet. And the money you have in the wallet will be the digital equivalent of the banknotes that you have in your wallet today. So every citizen will get one wallet per person if you have a national ID number, and then you'll be able to put a certain amount into your wallet and spend it just like petty cash, like you spend it today. Later on, they're going to extend it so the CBDC will be used for a wider range of transactions, including securities and bigger purchases. So basically, it's a currency which, to all intents and purposes, on day one, will be one-to-one against your existing currency. So it will still be called, in the UK, it'll still be called pounds, in America it'll be called dollars, in Europe it'll be called euros, but it is technically a different thing. It's like dollars which you can convert into gold and dollars which you can't convert into gold. It's two different things. So when the time comes and the world is in a crisis or the government can't pay its debts, it's very easy to declare that there's a temporary suspension of the ability to convert your old currency to CBDC. And of course, if they do that, that word temporary is likely to mean permanent. But if it is permanent, it would mean the government now has no more debt in a currency it needs to worry about. It has debt in old pounds or old dollars or old euros, and it can now spend its way to oblivion in the new currency, running up as much debt as it likes in the new currency, because it won't ever get near to the levels of debt we've got through the old currency. So if they do this blockage and stop you converting your old money to the new money at some point, there'll be a lot of losers. There'll be all the bag holders who have the old currency, but some of those losers will be pretty unfortunate people, like pensioners or people who've got their life savings in the old currency. And the government will still be able to afford to give some sort of help or bailout to those people, but it's obviously not going to be the same as if you'd not had your money blocked. Pension funds will need rescuing as well, because pension funds are chock-a-block full of bonds, which will be in government bonds and other things, which basically will now be in a defunct currency that nobody wants, you can't spend.
There's a couple of comments here. One of them is from Scott. With the US spending suspending the debt ceiling for 18 months and spending $850 billion in a month, what are they spending it on? Well, I haven't looked in detail the expenditures of the US government, but I would say it's a lot of it is the Inflation Reduction Act and subsidizing new industries, more government interference. There's probably spending a lot on the military. They're sending a lot of it to Ukraine. How do you see it, Clive? Have you looked into it?
Yeah. So most of it is what they call non-discretionary spending. So something like 2/3 of the US budget is taken up with social security and things like that. Of the remaining third, half of that is taken up by the military, and only 1/6 remains to be what they call discretionary spending, which is where they spend it on other things. So unfortunately, there's not a lot they're able to do about it, but the money is basically going into programs where they've allocated the money many, many years ago. They can't stop those programs. There's very little, I say 1/6, which is discretionary, which they can spend on new things like infrastructure, which they weren't planning on.
Yeah. Oh, there's a comment here, and I will read it. You know, some people might find it not nice, but we'll read. It's from Michael Kennedy, and what he said, Clive, I think it's in regards to the CBDCs, what you think could happen. And he says, Clive is great delivering the fear porn. Don't believe a word he says. Have you got a response to Michael Kennedy on that?
Well, Michael, thank you for the comment. I don't mind if people don't agree with me, but what do you think happens if you have a credit card and you're spending more on your credit card every month than you're earning, and your bill is going up and up and up? There comes a point when the interest you're paying on your credit card will exceed your salary. At what point does the bank turn around to you and say, we won't lend you any more? And I think that's the situation governments are finding themselves in, and they have to find a way out. Now, of course, the CBDC and a currency reset is not the only way out. There are other ways out. They could raise interest rates massively and cause a huge recession, but obviously that would bring back sound money to a certain extent. They could go for massive inflation with the central bank buying it all up and inflate it out of existence. And that would be very good for asset prices. So it's not, the currency reset is not the only way we might see a currency change. But historically, governments can't and have not been able to sustain excessively high levels of debt. The trouble is we don't know how high is too high. That's not documented for the Western world.
Yeah, and I think what Clive just said about credit card spending, there comes a point where you have to default on them and you can't pay them anymore. But governments, of course, they always have more wherewithal to keep borrowing because they control the currency, but it looks like investors are saying, well, this is too much, and that's why interest rates are going up. It's not just because central banks are raising it. They're raising it because I think investors are saying, we don't want these bonds because we can't see the debt. We can't see you stop borrowing. And I think a lot of people are waking up to the fact that the fiat currency system, if you pay off the debt, you destroy the economy. And I think it's one of the reasons why we spoke about earlier, and it's sad that Britain has fallen, in terms of prosperity, right down. And I think it's because of that. One of the big, I think, reasons why this has happened is because of the 2008 crisis. I think all the bailouts and all the spending on QE was kicking the can down the road, and now they can't stop kicking, and we're in this situation, and that's why the poor are getting hit harder, not just in the UK but in every other country. So I think that if they had let everything go in 2008, we might be in a lot better shape today, but unfortunately, we have an even bigger problem. So yeah, and what Michael Kennedy said, yeah, I think it's better to be 1 year or 2 years too early than 1 day late in this situation.
Yeah, I agree. That's why I think that people who've got excessive cash in the bank or excessive amount of bonds need to think about how long they've got to reallocate, readjust. It doesn't mean to say to get to zero. Everyone needs some petty cash or some money for emergencies and things like that. And it depends. If you're buying a house in the future, you need to keep cash for that to pay the deposit. But if you have funds which are surplus to your needs, at some point, they're going to be worth a lot. They're going to buy you a lot less, and that's been the historical norm as currencies have been debased and become worth less and less as the governments increase the supply of them via their central banks.
Scott is saying here, have you seen that the Fed has discontinued the measure of excess reserves on Fred in 2020? Is it due to reverse repos? I haven't seen that.
No, I haven't. I didn't know about it.
I didn't know about it. Oh, the other thing I saw the last few days is that Robert Kennedy Jr. said he would back the dollar with gold, silver, platinum, or Bitcoin, and that he would start slowly, like by backing treasury bills, 1% of treasury bills by gold. And he actually said that fiat currency, he said his uncle, JFK, knew that fiat currencies were bad for the general public, and they were, you know, it facilitated wars, and I agree with that. But I'm not too sure that we're in a situation where we can move gradually into sound money like that. I don't think it will work. What's your view on that, Clive?
I think every US politician is basically being forced into having some sort of opinion on gold, Bitcoin, those sorts of things. And the reason for that is the level of interest is starting to grow amongst their voters. So we're seeing a lot of politicians talk about gold, talk about Bitcoin or crypto in general. So I think there's certainly it's a political move, just as politicians promise you that they're going to spend more money on whatever on something that you like. So I think it's a political move by the politicians, but they can't now completely ignore gold or Bitcoin.
Yeah. I mean, one politician that I trust in terms of sound money and Federal Reserve would be Ron Paul. So, I mean, I like to see if Robert Kennedy Jr. is for real, if he'd want to, abolish the Federal Reserve. That would be a good step. And I think to have sound money, you abolish the central bank, and you abolish legal tender laws, and you let the market decide what they want to use as money. But someone's asking here, Clive, do you have anything on your watch list? I guess he means for the next week or two. I think the Fed has got its meeting in the next week or two. I think end of the month, isn't it? I think people will be watching that, even though I don't think it really matters. I personally haven't seen anything. I've been away. I have started reading a little more, but maybe you have something that you think we should be looking at.
So I wonder where he's coming from, if he's talking about economic indicators that I have as a watch list, or investments.
Probably, yeah.
I think it's important that people keep an eye on interest rates and keep an eye on the price of commodities in general to get a feel for which way it's going to go. But things are always changing. You can have a view one week, and next week it seems completely invalid because somebody's done something or said something, and what you thought was going to happen has suddenly changed. We're seeing the swings and roundabouts, for example, with the forecasts about the next direction of interest rates in the United States. We've had Jerome Powell make some very, very strong statements about how he's going to raise rates at least twice and maybe more. But then since then, we've had a much lower inflation number in the United States, and people are starting to rethink that. And maybe they say, well, maybe let it raise once and then go backwards. So things can change very rapidly. So all I can say is keep an eye on it, because things do change. And if you're thinking of things to buy, what I would say is the time to buy is when everybody else wants to sell, because that's when things are cheapest.
Yeah.
So look for something cheap, and then see if it's got any value in it.
Yeah. Andrew Bevan is asking, how will we be able to convert gold and silver to CBDCs? Let you answer that first, and then I'll add anything if I need to.
Well, I don't buy gold or silver with the thought that I'm going to change them back into CBDCs. I think if we do have CBDCs, which might be the forerunner to a currency reset, or might actually, we might have had one. I think I'm not going to trust that they're not going to devalue the currency, either the CBDC or whatever we then have. So I think I'm keeping these not to make a profit tomorrow or to sell. It's more of a heirloom type asset that I'd like to keep for the long term and hand down to my children. If we have a huge crisis unexpectedly, at least I'll be able to help out my family, help out my neighbors, because there'll be a new system starting. But I don't really see it's going to be something which you change back into CBDCs. But of course, like everywhere, if you've got an asset, you can sell it, and you can sell it for whatever the currency of the day is.
Yeah, that's what I think. Just like you sell gold and silver now for fiat currency, I'm sure you'll be able to sell it for CBDC. There might be a limit of how much you can sell, because there might be a limit of how much CBDC you can have in your wallet. So,
you'll remember, Mario, in the old days when we went to Europe, there were all kinds of exchange controls everywhere, and you were only legally allowed to change your money in the banks. But what did everybody do? They went to the arboretos standing under the trees, who were offering you a better exchange rate, sometimes twice as much, to change your hard money, British pounds in those days, or dollars, or they didn't have euros back then, into whatever they had, Hungarian forints or Romanian lei. So there's always going to be a buyer for an asset which is more valuable than what they've got.
Yeah, that's right. Black market. Yeah, I mean, in emerging markets, like I think if you try to get money from let's say you go to Brazil or Argentina, it's always better to have the cash, and you get a much better rate. And the other thing about gold and silver, like you said, yeah, it's more generational, a lot of it, and things might not stay the same. So we'll take one or two more questions, Clive, because it's I think it's time. It's 10 o'clock almost. Scott 49 asking, can I ask Clive some advice, as I've said I got a decent amount in a 2-year fixed bond with 4% interest. Do I still have enough time to put it into metals?
Well, we don't know what the price will be in 2 years' time. I don't know if it's going to be higher or lower, and you don't, Mario. And obviously, if you own gold today, or silver today, you're obviously hoping the price will be higher, but it may not be the case. What I advise those who want to own some metals is to buy gradually over time, and don't put all your eggs in one basket. But if you buy gradually over time, you will, when the time comes and it goes up a lot, you will have a stack. Right now, the fundamentals for silver are in favor of a higher silver price because the industrial demand is exceeding the mined supply. So the difference is being supplied by destocking or recuperation of old silver. And to get people to destock their silver, you need a higher price. For gold, it's a different equation. It's much more about the psychology of people and how much they trust the currency. So if the level of distrust of the currency increases, the gold price will go higher. If the level of trust of the currency goes up, and it would go up in a higher interest rate environment, they're going to be less likely to hold gold at that moment in time. But it depends on interest rates relative to the expected future rate of inflation and how much they're printing.
Yeah, just one. Thank you, Indurarama, for your super chat. Just last question. Someone asked, what's your view on this BRICS summit in August, and whether they're going to announce something, a gold-backed settlement system or a gold-backed currency? I've spoken about that, but maybe you could give your 2 cents on it.
I hope they do announce some sort of commodity or gold-backed currency, but it won't be a currency for you and I. It'll be a currency for settling trade transactions between the nations. And therefore, from a practical point of view, it won't be like something you can put in your pocket and go down to the shops and share and spend, or send your real or rubles or whatever you happen to have, or yuan, off to the central bank and say, give me my gold. That won't apply to individuals. But as between current countries, if they have a unified currency which is linked to gold or oil or whatever it happens to be, and they can trade it. It could be a very good settlement mechanism between the various currencies, just as happened to the dollar after the Bretton Woods conference. Everyone started trading their dollar balances instead of their gold balances.
Yeah, that's right. And yeah, I think the other thing that would have to happen if they do have a settlement currency backed by gold is that they'd have to fix all the currencies in the system to a weight of gold. Don't you think so? Because if you don't, countries can cheat.
That would be really nice if they did, and if they did that, they'd have to buy an awful lot of gold. I don't really see it working that way. I kind of see them creating a new currency where they would have to buy gold, and the new currency, each country will own a certain amount of that new currency. I don't know what they'll call it. Maybe they'll call it the BRICS currency or the 7 Rs. You know, Russia. No, was it?
It's
the
ruble,
ruble,
real,
renminbi, yeah, real,
rand,
ringgit, rand. What's the Indian one? Rupee. So they may give it a new name, and therefore. But they'd need a central issuing authority to do that, like the Bank for International Settlements. Obviously, it's not going to be the Bank for International Settlements, but they might form some new global banking entity to issue these currencies.
Yeah, there's the new development bank, which they call the BRICS Bank too, maybe.
Okay, yeah, maybe.
All right, Clive, thank you for coming on, and I thank everyone as well for coming on for the live stream. And yeah, any last words, Clive, to the viewers?
Well, I always advise people to diversify. Don't put all your eggs in one basket. Don't panic, and try not to rush into the latest bull market, which obviously is the artificial intelligence bull market. It's way overpriced, but a lot of people are getting suckered into that, so I'd avoid that.
I agree with you, and yeah, diversify. And I also think not to panic and not to be scared about all the bombardment of news and bad news out there. And Crypto Cat, thank you for your generous super chat. And he says, look at XDC. Okay, we'll look at that, Clive. XDC. That must be a crypto.
Someone popped the word XDC to me today or yesterday with a list of cryptos, including XRP.